exactly like we saw in the past, many projects and tokens launching on Ethereum when they enabled smart contracts. Now, since they enabled smart contracts in September 2021 on Cardano, many decentralized applications are being built and the ecosystem is expanding. There is a lot of opportunity in the Cardano ecosystem to buy in early on good projects, and Liqwid Finance, in my opinion, is one of the best Cardano projects that you should be aware of. In this video, we will explain what Liqwid Finance is, how it works, and if it is safe in comparison with Luna and its protocol Anchor, which offered high percentage rewards before collapsing. Don't forget to subscribe to do not miss the Bitcoin giveaways with the profits from this channel. Liqwid Finance is an open-source algorithmic and non-custodial interest rate protocol built for lenders, borrowers, and developers. In a traditional bank, you can leave your funds for a determined period and earn yearly interests as low as 1%. Liqwid Finance works exactly like a bank, but it offers higher interests, and this is not the only feature available. Blockchain technology allows Liqwid Finance, a decentralized finance protocol, to offer similar services without a third party and with much higher interests. Here, people will be able to lend, borrow, or leave money on the protocol to earn a percentage from the interests as rewards. Liqwid Finance offers low or zero interest for borrowers and leaves most of the interest rewards to lenders. This means that comparing it to a bank, it cuts all the expenses that a traditional bank has, for example, the employees, the physical rent, and other expenses. These money can now be used as reward for lenders that decide to leave their funds on the other side, considering there are no high expenses to cover. Borrowers' interests will be lower, and they will mostly go as rewards to lenders, and a small percentage will be kept for other purposes. Liqwid Finance was founded in 2020 by Dewing Cameron and Florian Volory, and they started building it thanks to Cardano Catalyst funds. Project Catalyst is a series of experiments which seeks to generate the highest levels of community innovation. Catalyst is bringing on-chain governance to the Cardano blockchain by allowing the community to self-determine priorities for growth. Project Catalyst is divided into a series of funds which are deployed every 6 weeks. These funds will elicit ideas in the form of proposals from participants. This way, Liqwid Finance had the majority of the community voting to provide funds from the Cardano reserve to support the development. The Liqwid team is composed of traditional finance industry veterans, DeFi power users, and Haskell developers, and in the past months they announced many new developers onboardings. They have a very slow progress in Cardano style, and I think they will deliver an excellent product. You can follow them on Twitter to get to know on time all the developments updates directly, where they in fact give a weekly development update. The launch date of the application has not been announced yet, but I believe this will happen soon as they were waiting for Cardano's hard fork and JED to launch on mainnet. JED is the first logarithmic stablecoin in the Cardano ecosystem, which I personally covered on this channel in details. If you want to watch, I will post it at the end. The decentralized application should be already fully functional, as according to their roadmap, it was supposed to launch by June last month. However, even the Cardano hard fork and JED stablecoin should have launched last month but got delayed to this month, which makes me think that Liqwid will also launch their app probably very soon. Their Twitter account had a significant growth at the end of last year to reach 50,000 in just a few months. After that, it slowed down since we are in a bear market and the interest is much lower. However, they have over 58,000 followers, which were daily more interactive. Now the community is probably just looking forward for a bullish overall crypto market, and we will likely see it growing exponentially when this happens. Before we continue, I just want to clarify something that you might have forgotten. We only do educational entertainment, and my job here it is not to be your financial advisor. So please do your own researches before investing. The main features of the decentralized application are lending and borrowing as mentioned above. Here we can see how exactly you can earn rewards on the app if you deposit funds. When you provide any sort of liquidity to the platform, you get Q tokens. Example, you provide 10 Sunday Swap tokens, you get 10 Q Sunday Swap. Or if you provide 10 Liqwid tokens, you get 10 Q Liqwid tokens. First, you can basically earn Liqwid tokens if you stake these Q tokens. If you provide ADA, you will be entitled to get more rewards. You will be able to 5x your yield rewards, and they have 4 additional yield schemes, which we are going to cover shortly. First, by staking ADA, you will get 4 to 5% more ADA yearly thanks to Cardano staking rewards. Second, when you supply ADA, you will get Q ADA, which increases its value on an interest yield calculated yearly on the borrow interest. This phase is called Acquifire, and you can read in more details on the white paper. But this means that ADA depositors earn lender interest from ADA borrowers repaying their loan plus interest. Third phase, called the Hydroponica. Here you can earn an extra reward if you stake these QADA that you get when you first deposit your ADA coins. The reward you earn is in Liqwid tokens daily. 47.5% of Liqwid token supply is allocated for the community distribution program that starts at mainnet launch. Fourth yield reward comes if you stake these earned Liqwid tokens into the Agora safety pool. Here you will earn a protocol dividend that comes from a small percentage of the total borrow interest repaid each epoch or 5 days. And you will get additional Liqwid tokens as part of the insurance pool's safety incentive. Fifth, you can stake this protocol dividend back into the Agora safety pool. Sixth yield reward comes from the liquidation interests in ADA coins on Liqwid tokens. These 6 yield streams were just for a ADA holder, but there are 3 more incentives which is worth be aware of. First, users borrowing assets from the protocol earn 50% of the daily Liqwid tokens distributed to that market as part of the Community Incentives Program. This means that 50% of the daily distributed Liqwid tokens goes to users that borrow ADA coins and use the protocol. Second, with the borrowed assets, ADA coins or other, users can supply them in a decentralized exchange liquidity pool and get temporary liquidity provider tokens while earning the swap fees. Liquidity provider tokens can be swapped back for ADA at any time. Third, if eligible depending on which decentralized exchange you use, users can stake their liquidity provider tokens to earn the yield farming reward of the decentralized exchange. Lastly, the rewards earned from the yield farming on the decentralized exchange can be put to work on further staking pools, etc. I think many things are set and aligned ready for launch, and they are likely just waiting for Cardano hard fork and JED, their stablecoin, to launch. Many users will try and use the platform because Cardano holders want a place to leave their funds and earn good rewards, and in my opinion, this will be the best platform if it will be fully functional as per their white paper. In the last months, they have announced many new partnerships. One of the most important is with Cody Network, which has the role of maintaining JED. JED has been built by IOHK, or Input Output, the Cardano's team, and it is the first over-collateralized ADA-powered stablecoin protocol on Cardano. Liqwid Finance will support JED as collateral type on the platform at launch. This will boost liquidity and will allow users to mint stablecoin loans. JED recently launched their test net, and soon they will launch their main net in the last week of July, which makes me think that Liqwid will launch their app too once JED is ready to go. They have partnered with a DAO to work together with their developers and build Agora, an open-source governance module built not only for Liqwid Finance, but made available for any Cardano projects. They in fact recently released an article mentioning how important it is to launch the decentralized autonomous organization fully synchronized with the Volume 1 of the application, and they have been testing this on Discord to keep the community active. However, Agora governance will be synchronized at launch with the actual ADA coin weight, so who has more Cardano coins will have more vote power, exactly like Project Catalyst on Cardano. In the past months, they launched their NFT collection called Aqua Farmers, which have been a success so far. This is a one-time collection of 10,000 NFT on the Cardano blockchain, and depending on the rarity of the NFT, you can stake it on the Liqwid protocol and earn up to 5% extra rewards on top of what you already earn. The minting or creation cost was just 4 to 4 ADA per NFT, and the floor price or minimum price is now 265 ADA coin, slightly lower compared to a few months ago, and the owners are actually half, so a lot of people sold them. The most expensive are worth thousands of ADA coin, but keep in mind that these are listings made by owners. If this gets never sold, are worth less, and some of them are just overvalued and will likely never sell for those high prices. Lastly, they then partnered with Jiro Wallet. Remember that Liqwid Finance has been built for developers because they will be able to connect other decentralized applications balance directly to a Liqwid market to earn interests, and this is the first of many to come. At launch of Liqwid Finance, from Jiro Wallet's dashboard, users will be able to access Liqwid services, while Liqwid will integrate Jiro Wallet. All these partnerships will increase the exposure of the project, and it will bring many more investors in. If we now look into the roadmap, we can see here that they had a private test net in Q3 2021. They did in fact release some demo video of how the app will work. And it is over 9 months now that they are improving it on a test net and giving weekly development updates. At the end of March, they announced that in April a public test net will launch. However, this has yet to come as they kept it private, which is disappointing for the community. They were supposed to launch the main net in Q2 2022, so by June, but they are delaying it for the reasons mentioned above. However, they will likely launch it very soon. When they will launch in the coming weeks or months, I believe they will have huge adoption of the platform, as it is one of the most supported projects on Cardano. If we now go into tokenomics, there are 21 million LQ tokens as maximum supply. At the moment, 365,000 tokens are in circulation, and it has just 20 million ADA market capitalization, or $10 million roughly, which in my opinion is extremely low. There was no initial stake offering, no pre-sale, no VC funding, just a fair launch. The only way to earn Liqwid tokens is by buying it, using the protocol or receiving grant funds from the decentralized autonomous organization's treasury only from day one on launch day. LQ is a governance token as mentioned before, so holders will be able to vote on the future of the project. At the moment, you can take part of this with their Discord. After that, you will be able to vote through Agora DAO or directly from their decentralized app from launch day. If you want to buy the token, you can trade it through SundaySwap and MusliSwap decentralized exchanges, as you can buy it on Hotbit, where they recently been listed on last April. In the last months, they have been also listed on CoinMarketCap and CoinGecko, which is another good news that will increase visibility and exposure at launch. As we can see, the supply will be slowly released over 2 to 3 years, and it is distributed this way. 25% will go to the team, 60% will be distributed to the community, 10% for yield farming, and 5% for the decentralized autonomous organization. Basically, 7 to 5% will be slowly distributed to the community, who provides liquidity to the protocol, and 25% for the team, slowly released, which is positive for price stability and growth. I think Liqwid protocol has a lot of potential, and what is most interesting? If we compare it to Luna and Anchor protocol, Anchor was offering high yield rewards with their stablecoin, which was collateralized by the Luna token only. Liqwid is built on Cardano. Different yields are already offered by the Cardano ecosystem, and it will also function with their stablecoin JED, which is over-collateralized, and this makes a big difference in my opinion, making the protocol much more secure. I think Liqwid will have a huge growth considering it is one of the most supported DeFi protocol in the Cardano ecosystem. ADA coin and Liqwid tokens demand will increase, which will exponentially drive the price higher for both tokens in the coming months. But of course, it depends on how Bitcoin will perform first of all. If Bitcoin goes lower in value, I would not be surprised to see the Liqwid token go even lower. However, it has the potential to increase by a significant percentage once the overall crypto market and Bitcoin turns bullish. We are going to use the platform, and we will update you on how safe it is and how good the rewards are, so make sure to subscribe to don't miss the update on this and many other projects. If you want to understand how the first stablecoin on Cardano works and why it is safer compared to other stablecoins, watch this video.